Now that our job cost records are done, our journal entries are done, and our T accounts are set up, we can finish up this assignment by making our schedule of cost of goods manufactured as well as our income statement. The first thing we need on our schedule of cost of goods manufactured is our beginning work in process inventory. Well, if we go to our job cost records, in the company description we have up at the top, the very first line tells us that Marge's Sofa is a brand new company beginning operations in 20XX. If they are brand new, that means they couldn't have had beginning anything because they just started. So we can fill in 0 for our beginning beginning work with inventory, and we can fill in 0 for our beginning direct materials. For the purchase of direct materials, let's go to our journal entries. And if we scroll up to the very first entry we had, Marge's purchased $29,000 worth of raw materials, but only $24,000 of that was direct materials. So when we go to our cost of goods manufactured, we're going to fill in that $24,000 worth of direct materials, not concerning ourselves with the $5,000 worth of indirect materials we purchased. Our direct materials available for use is equal to what we had in the beginning of 0 plus the amount that we purchased, 24 grand, comes out to be 24,000. Last line here says the entirety of the end balance of Marge's raw materials account consists of direct materials. That makes it easy. We can just go hit equals, go to our T accounts, and take the balance of our raw materials inventory, which is $16,500. So to figure out the amount of direct materials, this should be negative. So let's go after equals and just throw in a negative sign to flip this over. There we go. Direct materials used, easy enough. It's going to be equal to the amount we had available for use less what we had at the end, or in this case plus the negative number. We used $7,500 worth of direct materials in total. Is this correct? We can check this by our journal entries. This entry right here that I'm moving the mouse around on is our raw materials entry. Direct materials went into WIP inventory for the job, and job 1 had $2,500, job 2 had $4,000, and job 3 had $1,000. If you total those three numbers up, you come up with, in fact, ta-da, $7,500. So we know we're good there. The next thing we need to figure out on our cost of goods manufactured schedule is the amount of direct labor that we had. Well, that number is going to be equal to the sum of the three amounts that we spread out across our jobs. We allocated $4,250 to job 1, $6,000 to job 2, and $1,000 to job 3. Close up that parenthesis and we enter. In total, that's $11,250 worth of direct labor that we had. And for our manufacturing overhead allocated, we can go check this in our journal entries as well. In the entry where we allocated overhead during the period, we see it right here. We allocated overhead to jobs equal to $22,500, so we can bring that number over. We have our three costs now. We have our direct materials used, our direct labor, and our manufacturing overhead allocated, which means that our total costs incurred during the year is equal to the sum, put the parenthesis the right way, of these three numbers. And our total manufacturing costs to account for is equal to whatever we had in beginning work in process inventory, which is 0, plus the cost that we incurred during the year, or in this case during the month. Comes out to be $41,250. So now we have to subtract out our ending WIP. Easy enough. We can go to our T account to figure this out. So let's put in equals and a negative sign, and we're going to go to our T account and find the balance of jobs that are still a work in process. Job 1's done, job 2's done. All we have in our WIP inventory accounts in total is this $4,000 from job 3, which makes sense because we finished job 1 and job 2, which means that our cost of goods manufactured for the period is equal to our cost to account for less what we have left, or in this case plus the negative $4,000 that we had in ending WIP. $37,250 was our cost of goods manufactured. And now that we have that number, we can move on to our income statement. On our income statement, we're going to start with our net sales revenue. And our net sales revenue for the period, if I can get my sheet in front of me, there we go, is $46,000. Where did I get that from? Well, easy enough. You come in here, you hit equals, you go to your T accounts that you have for net sales. We only had that one sale, it was 46 grand, and we brought it over. Over here we need to start figuring out what our cost of goods sold was by starting with our beginning finished goods. Again, we are a new company, so it is 0. For our cost of goods manufactured, we just figured that out. We're going to take the end number of our cost of goods manufactured schedule is at $37,250, and when you add your beginning finished goods plus your cost of goods manufactured, you're going to come up with your cost of goods available for sale. From that, we're going to have to subtract out our ending finished goods inventory. So let's say equals negative, go to our T account, and we're going to figure out what we have in finished goods. It's right here. It is $15,250. So we bring that over. When we take our cost of goods available for sale and add to it our negative and ending finished goods inventory, we're going to come up with $22,000 as our cost of goods sold before adjustment. And that's convenient. If we go to our journal entries, we see that on our sale we did have cost of goods sold of $22,000, so that checks out. Everything's working out well here. But we have an adjustment, and our adjustment back on our journal entries at the bottom was for that $900. We reduced our cost of goods sold by $900. So on our income statement, let's do exactly that. We'll have it be equal to the amount that we adjusted cost of goods sold for, and it means that our total cost of goods sold is now equal to whatever it was before the adjustment plus the amount of the adjustment. We had $22,000 worth of cost of goods sold before we realized that we over allocated overhead, and since we over allocated overhead, we had to bring down our cost of goods sold. The cost of goods sold on that sale should have actually been $21,100. For gross profit, all that is equal to net sales revenue minus our cost of goods sold. Our sofa had gross profit of $24,900. Next up, we have our selling and administrative expenses. Well, we need to figure out that information, which is conveniently given us at the top. And it says right here, whilst preparing the statement, assume that the company had total selling and administrative expenses of $9,500. So let's fill that in. To figure out our operating income, we take our gross profit and we subtract from it our total selling and administrative expenses. We had $15,400 in operating income. For our other revenues and gains, that's going to be any positive income that we had from something besides our normal course of business, which is producing sofas and recliners, etc., which is going to constitute this interest revenue. We had $600 in interest revenue, so let's fill that in the interest revenue line. And when we add together our operating income plus our interest revenue, we're going to come up with $16,000. To figure out how much we pay in taxes, we simply take that taxable income, our income before income taxes, and we multiply it by our tax rate. And our tax rate given in the information is 25%, which means we're paying $4,000 in taxes. So if we had $16,000 in income, but we had to pay $4,000 in taxes, that means that we had $12,000 in net income for the period. Not grand for Marja Sofa, though they are doing a pretty good job of turning net sales revenue into net income. They're just not doing a good enough job of selling goods. They need to, flip more merchandise as fast as they can, because they have quite the overhead expense having two buildings to be selling as little as they are. Not going to be in business that long if they're only bringing in $12,000 in income a month. So with that, the test is done. Good luck on yours.